When you invest overseas, your tax obligations don't end with a golden visa, they start there. For U.S. investors, the real work often begins with navigating a dual compliance zone. Beyond your regular U.S. income tax return and managing PFIC taxes, there are two key reporting requirements that you must understand to stay compliant: FBAR and FATCA. Think of them as two separate but complementary systems. One is a broad sweep, the other a fine-tooth comb. First, let's talk about FBAR, the Foreign Bank Account Report. This is a crucial reporting requirement that applies to you if the combined total of all of your foreign financial accounts, including bank, brokerage, and investment accounts, exceed the value of the equivalent of 10,000 US dollars at any point during the year. The key here is aggregate value. If you have two accounts with the equivalent of 6,000 US dollars each, you still have to file. FBAR is an informational form. It's FinCEN Form 114. And that's filed separately from your tax return with a different agency. Second is FATCA, the Foreign Account Tax Compliance Act. This law requires U.S. citizens to report their foreign financial assets on a form called Form 8938, which is filed with your income tax return. The reporting thresholds for FATCA are much higher than FBAR and vary based on your filing status and whether you live in the U.S. or abroad. You are likely to have FATCA reporting obligations if you invest in a golden visa fund. FATCA is a two-way street. Also requires foreign financial institutions, like banks and investment funds, to report information about their U.S. account holders to the U.S. IRS. This creates a second trail of reporting on your assets, making it almost impossible to hide. If you're one of the folks that took the risk and decided to invest in a golden visa fund with your U.S. IRA, you may think you invested inside of an IRA, but assets in civil law jurisdictions are held in the name of the ultimate beneficial owner of the IRA. So the U.S. Treasury will receive a report that names you personally as holding these assets. If you didn't also report those assets on your personal tax return because you thought they were inside of an IRA, the IRS just might decide to ask you why. While failing to file FBAR or FATCA can lead to serious penalties, the real danger is not knowing about them in the first place. This is especially true if you're using a complex investment structure, like a self-directed IRA. Let's look at the financial consequences of getting it wrong. The penalties for non-compliance are severe. For FBAR, a non-willful failure to file can result in a penalty of up to $10,000 per violation. For a willful failure, the penalty is the greater of $100,000, or 50% of the account's highest balance. For FATCA, a failure to file can result in a $10,000 penalty, with an additional $10,000 penalty for every 30 days of continued failure after being notified by the IRS, up to a maximum of $50,000. And a significant understatement of tax can lead to a 40% penalty on the underpaid amount. As we discussed in another video, the legal and banking systems in Portugal and other civil law jurisdictions do not recognize U.S. trusts or IRAs. They are common law structures. This can lead to your investment being titled incorrectly, which could be considered a prohibited transaction if you used an IRA, and cause your retirement account to be treated as a taxable distribution. The irony is that while you might be diligently filling out your FBAR and FATCA forms, you could be unknowingly violating a different, more serious tax rule that you didn't even know existed. We go into this in much more detail in my video, Why Using Your IRA for a Golden Visa is Asking for a Disaster. This lack of compliance also poses a significant regulatory risk. If a fund is cutting corners on U.S. securities laws, it could face enforcement action from the SEC. This can destabilize the fund and put your entire investment, and by extension, perhaps your residency status, at risk. This is the ultimate danger of poor compliance, a topic we explore more fully in my video, Don't Get Burned, the 7 Interrelated Risks Golden Visa Investing. Navigating these reporting requirements is a crucial part of protecting your investment and your residency status. You cannot rely on foreign advisors to understand these rules. For a full education on how to identify these traps and stay compliant, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.